We have Henry Croft joining in, who's a research analyst with Ascendo Markets. Henry, thanks a lot for coming on board. We've seen a liquidity-fueled rally at the start of this month and even the last couple of months of 2017. Markets clearly seem to have ignored, macroeconomic concerns. Do you think liquidity is now in turn playing the devil and is actually fueling this massive sell-off that we're looking at? Because fundamentals, according to most experts, doesn't really seem to be a concern at this point of time.
Well, good afternoon. Yes, so the concerns about leverage is something that has definitely begun to pique people's interest, especially given the events that have been happening in the US over the past week or so. So we've been in a constant melt-up, as it's described, since, as you said, the end part of 2017. Even before that, during Donald Trump's election, we've seen quite a steady market rally, not just in the US, but globally. We've seen global indices hitting multi-year highs. And since then, the propensity for investors to go into things such as exchange-traded funds, where their money will automatically be placed in through passive investing rather than an active manager who will individually look at the stocks, has been something that has helped the rally go higher up until the last week or so. And now that we're starting to see volatility creeping back into markets, the use of these products, these electronically traded products that will look to actually profit during low volatility, has been brought into question, and how markets then react to these volatility shocks is the big question now. That's something that has been particularly prominent over the last 5 days of trading, both in the US, most importantly, but also in the UK as well, and the rest of Europe and Asian markets too.
Hi, Henry. This is Nantara joining in from the New Delhi studio. I should say good morning to you. If you look at the Dow now, it's down, about 10% from its record high. You've got the US 10-year Treasury yields touching 4-year highs. Europe is under pressure, and we've seen that on the at opening bell as well. My question to you is that where is all of this money going? It's not in equities. We're not seeing the kind of inflows into gold either. Crude prices, in fact, have been falling. So what happens next? What is the new safe haven, if I could ask you that, and what is it going to mean for inflows into emerging markets like India? Investors like safety, so will they like emerging markets when you have all this uncertainty? I would guess not.
Yes, well, it's a very good question, and it's another thing that these electronically traded products brings about. It's a new paradigm that we haven't really experienced before, because investors are trading these products where their money is automatically managed through algorithms and other such products that have been developed to follow trends. We're now seeing, when we have had these sell-offs throughout the week in the US, that a lot of the money is just being turned straight back into cash. It's not being reinvested elsewhere because they're not actually capable of keeping up with the trends themselves, and it's actually uneconomical for them to continually rebase their positions throughout the trading session because the trading costs will be so high. So a lot of the money is just being liquidated out into cash. So we haven't actually seen too much of a reaction. We haven't seen the money being outflowed specifically into another area of an area of investment, which again is to your point about gold. Normally we'd see gold spiking in times of sell-off, especially a 10% sell-off on the Dow Jones within a week. You would expect gold to see a reciprocal reaction. However, that money hasn't actually been reinvested elsewhere, and as you said, the bond yields are spiking as well. However, there's still a little bit of hesitancy around bond yields, whether we have seen the great bull run come to an end. It's a very good question. It's a question that investors will be asking, where to move their money next. I feel there is a certain period of pause now to actually take a step back and look at the available opportunities and where is the next opportunity to go into and put all of this fresh cash back into markets.
Right, Henry. So I don't think anybody knows where to put their money next. I don't know about you guys in Europe. In India, we don't even have that option of a Bitcoin. The tax man doesn't like Bitcoin. The minute they find out about it, you get served with a tax notice. Well, we're completely out of time. Always a pleasure chatting with you. Thank you so much for joining us.